in this up move is Cyient because it posted a disappointing set of Q2 earnings. Revenues and margins have both come in below estimates, but the deal wins this quarter are quite good. They came in at a 4-year high. The company has also maintained their FY23 guidance, with the revenue growth expected to be at 13 to 14%. And they have a visibility for $1 billion of revenues by FY24. Krishna Bodanapu, the MD and CEO at Cyient, joins us now to talk about that. Mr. Bodanapu, good morning and thanks for joining in. I want to talk a little bit about your guidance for FY23 and FY24. Given the kind of macro challenges that we're sitting on, perhaps the US heading into a recession as well, do you think it may be tough to meet this $1 billion revenue run rate by FY24?
Good morning, and thank you for having me on the call. So we looked at all the industries that we're in and looked at what is the impact of any potential recession on these industries. And then we took the call that it was quite possible that, or it was quite within range for us to hit that number. Because if you look at some of the things that we're doing, be it the energy transition or be it the semiconductor transition between the plants moving from China back to the US or Europe, we participate in a lot of that, and I think those things will continue. I mean, of course, if it's a black swan event, then we can never estimate what happens. But we're quite confident that as things stand and as things are continuing, we're in a good position because of the way or because of the work that we do and the kind of industries that we participate in.
Okay, all right.
So that's we're confident.
All right, Mr. Krishna. So good to hear that you're pretty confident, but the street still believes that it's going to be a tall ask for you to maintain the guidance that you've given for this year itself. That's FY23. You're sure you're going to do that, right? I think organic growth guidances were around 13 to around 14% and margins as well in that vicinity. Do you stick to that? And just doing a rough math, you're currently doing around $175 million per quarter. For you to get to that $1 billion odd, you'll have to do around $250 million. When do you get to that particular number? Sometime in FY24? Which quarter do we look at you scaling the revenues to that level?
We're looking at the second half of FY24 because one other thing I'll mention is out of the 170 odd million that we did this quarter, the CTech, which was a big acquisition that we made in Finland, that number is not fully baked. And I mean, that itself will give us two months of uptick in the next quarter. So the run rate itself becomes quite a bit higher because of that. So we are, it's close to a $200 million number in that case. So we're really going from a 200 to a 250 number. That's essentially the math over there. So therefore, it is well within the possibility of how things will pan out over the next couple of quarters.
Mr. Bodanapu, deal wins in the services segment have fell almost 9% on a quarter-on-quarter basis. Could you give us some sense of what happened there?
Two things, right? One is it's just seasonality in the quarters. If you look at it year on year, there was still a growth, and especially we have to, unfortunately, now we have to also look at constant currency versus the dollar, given the fall in the dollar. So if you look at the year on year, there's actually been quite a good growth in constant currency in the deals. And also, if you just look at what's been flashing, that's the 5 large deals. Those are just the large deals. There's also a number of other deals. So that's not the total deals that we have won. Therefore, Q2 is what it is. I mean, again, if we look at a year-on-year number, we're actually tracking reasonably well in terms of what happens. And therefore, we're quite confident in terms of where the order book stands and where there's enough of potential for us to further grow.
But if you slice through different segments, right, the rail transport segment is looking quite weak for you. There's been an excess of 8% fall over there. Do you anticipate further weakness? And what is the contribution to the overall order book?
The rail segment is roughly constitutes about 7% of our overall revenue. It's been a tough segment. I think both for us and the rail market in general have been going through quite a bit of a lull. We believe that we've bottomed out. Again, it'll be a bit like what happened with the aerospace in 2021, where there was a bottom and then we stabilized at the bottom. And of course, now we're seeing some good growth in the aerospace segment. So what we believe is rail has bottomed out. It'll remain here for a couple of quarters. And then Q4, Q1 onwards, we're seeing some good growth. But it's about 7-8%. So that's the one segment that's still quite disappointing for us. And that's the one segment that still has a bit of risk, but again, it's a relatively small segment now. Whereas the larger segment, especially, I mean, aerospace, which is obviously a segment that we're well known for, and it is something that we, that people associate us with, has now shown a double-digit growth in constant currency. So I think the larger segments, communication, aerospace, are doing well, and therefore we can still mitigate against them.
All right. Mr. Krishna, the attrition, you were hoping that it's going to cool off. Though in the past quarter, it's still around that 28.5% odd. Do you believe it has finally peaked out now, attrition, and it will cool off from there? That's point number one. And the second factor is, you mentioned about Cyient. I recall we had a chat earlier in the year when you acquired that asset, and I think it was doing around 80 million euros. That's what it did for 2021. What is it likely to finish 2022 with? A very, very rough number from that 80 million euros on?
So in terms of dollars, it'll be about $80 million just because of how euro and dollar have panned out. So roughly that'll be the number. I think it'll be a little bit higher than that, actually. Sorry. It'll be, I think, 84 or $85 million is roughly where the number will be. And in terms of attrition, it has cooled off. I mean, it's come off. I think 26.5% was the attrition that we reported for this quarter. It has come off about 3% compared to the previous quarter. So we are seeing that downward trend on attrition. But having said that, I think definitely we need it to come down to more in the tens, maybe 18 is what we would be quite comfortable with. So we still have a lot of work to do, but I'm quite pleased that it has come down from Q1 to Q2.
By
and that
when?
trend will...
By when can we see that targeted 18% that you're talking about?
I think 18% is a bit of dependent on the market as much as on us. Therefore, we believe that it'll happen possibly towards the end of this year. That's where because we see some good potential already in terms of future resignations, etc.
I have two questions. You briefly alluded to the aerospace vertical. Is that sort of going to take off in a big way? I mean, air travel is back, certainly. I mean, I'm talking about domestic, global, and just some longer-term guidance there, because that's an important vertical. And second, for the design-led manufacturing vertical, the DLM vertical, which is about 15% of revenues, you were selling that off, right? Could you provide us with an update where that is?
Okay, so aerospace, yeah, we think that the turn up is starting to happen. I mean, we've had some obviously some challenging quarters there, but things have stabilized quite a bit, and we're actually seeing growth coming back on the MRO piece of the segment. To your point, air travel is coming back, air travel is picking up, and therefore that whole MRO segment is actually picking up for us. The new design starts still have not happened as we anticipated, that they would take some more time to happen. And when that happens, we'll see some further acceleration in that business. And again, I think we're well positioned there. We've seen the worst of it, and now actually we're quite well positioned with the aerospace segment. On the design manufacturing, the board has appointed a subcommittee. I just want to say we've not taken a decision on fully selling it off. We believe that Cyient should still have some involvement because we're winning some very good deals based on the fact that we can do engineering and design. So we're actually winning some very good deals. So we don't want to break our involvement with the business. So we're looking at potentially an IPO or bringing in a bringing in a strategic partner to participate in that business. So the subcommittee has been appointed. I think it was 2 weeks ago when we made that announcement. But we will start to see some action on it. I think we meet twice a week now, and we're evaluating all the options. As soon as there's a definitive option, we'll let our shareholders know. But right now, the idea is we still want some involvement, but the shareholding of that business doesn't lend very well to where the growth potential of that business is.
This is right now fully. This is part of the listed entity, right? Fully owned.
Yes, it's 100%. Yes.
And as you said, this is seeing good traction. At least this quarter, it won a large order from Honeywell.
Correct.
So, and you're saying that you could spin it off and list it separately. That is also an option after you get an investor in it.
Absolutely.
By when do you decide? By when do you decide, Mr. Krishna?
This quarter we will decide.
By quarter 3, you'll know your audience will know whether or not the investor comes in or it's an IPO, right?
Yeah, within quarter 3, you will know. Yes.
Okay.
And what could be the valuation of this business? I mean, how should one think about that?
I think it's speculative, so I would.
I mean, globally, what do these businesses trade at? I mean, if you can give us some idea.
I think you're a better judge of that because I think
All
there's
right.
Okay,
All right.
Sure, just
but
one-
that's interesting. You're saying you want some part of it. The structure has to be decided. So it's not. It perhaps is not a complete spin-off. Got it.
Okay.
No, it definitely is not a complete spin-off. I want to reiterate that because it's a very good part. And like you also pointed out, the Honeywell deal is a great deal for us to use as a case study. So no, we will not do that. We will still hold some ownership.
Okay, you still hold some ownership there. You spoke about your $1 billion target by FY24. What will the amount of money that comes through from acquisitions, what will that be? I think earlier you had alluded to $150 million on an annualized basis. Is that the run rate that you're looking at?
Yes, absolutely. That's the run rate. We don't anticipate any further large acquisitions on top of that. But it's this $150 million that's already baked into that.
Okay, so no further acquisitions planned by the company.
Nothing significant.
Okay, all right.
We do need.
Sure. Okay, thanks a lot. We've got that.
Thank you very
We'll
much.
leave it at that. That's Cyient, down almost about 3% odd, but they are quite confident that they will meet their $1 billion target by FY24.